presentation contains current opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compak YouTube update for August 15, 2023. I'm Mo Ansari, President of Compak Asset Management and host of Market Wrap. You can get all of the media that I do simply by going to compak.com/media. Right down here, compak.com/media. If you go down there, go to that website, you can download all of the media that I do. The YouTube updates, the daily podcast, the broadcast, the weekly one-pager, all of the information in there. And you can also register for the webinars that I do. I'm going to talk a little bit about the Fed, the market, the economy, technical analysis, and the week ahead. So let's start with the Fed. Fed has basically said they're going to wait, that 88.5% probability that they're going not to raise interest rates in September. But there's a 30% chance they're going to raise by November, 25 basis points. But we are starting to see slowdowns in China. On the other hand, we are seeing inflation numbers being a little bit more sticky than expected, and we are seeing gasoline prices go up. That could basically hold up inflation for a period of time. The biggest component in inflation, as I've said, has been rents. Rents will take time. They're coming down, and by next year, they're going to turn negative, where they will be taking away from inflation instead of adding for inflation. So looking at the market, large cap technology stocks are the ones that have come down the most, and then you're seeing the NASDAQ. So we're seeing the correction. I talked about this a couple of weeks ago. August is a weak month. Technically, we reached the fifth wave. After we reach wave 5, we start getting some kind of pullback, an ABC correction, or 5 waves to the downside. I hope it's only an ABC correction, but August and September could pull us back a little bit more, a little bit of choppiness, but I don't expect a bear market at this point. We'll have to wait and see how deep this correction is. Looking at the economy, PPI inflation, momentum is a little bit on the headline inflation, turning back to the, at least not going down as quickly. You can see goods coming down fairly fast. You can see core still holding, not coming down, but services is the problem. They're heading up, and that's really what is adding to inflation a little bit. You can come and attend the webinars that I'm going to do. I'm going to do one on September the 19th and then one on October the 17th. That's a live seminar that I will do in Scottsdale. That's October 17th. If you want to come and register, do it now. Let's take a look at the technicals. After we see a fifth wave top, like we did last August, from there we came down to the October low. This is a daily S&P chart, and it's pushing down. Once we hit the ABC, this was an A, move to the downside, B back up, and then C to the downside. This was the C wave. Then we start wave count to the upside. 1, 2, 3, 4, and the fifth wave. Once we see 5, like we did here, we see 5, then we're going to see what is an ABC correction, or 5 waves to the downside. We broke the 20-day, we broke the 50-day, and today we are sharply below the 50-day. We're at 44.23. This is as of the 16th, so this is today's close that we're seeing. Support now is right about here, and then major support right around here is what I'm seeing. The 200-day moving average is all the way down here, about 4,100. So we're ways away from that. This is a weekly chart where each one of these vertical lines, the green and red lines in 1 week. This was the 2021 low that we saw. 5 waves to the upside. Once we see 5 A, B, C correction all the way down to last October. From there we've started wave 1, wave 2, wave 3, and we could be in wave 4 right here. 43.19 is the number, and that's still about 100 points lower than where we closed today. That's the next support. I think we could get down somewhere around 4,300 to 42.75 is the fourth wave. Or we could just have a minor pullback like we saw here within the wave 3. So we'll have to wait and see. If we get much below 4,200, then I would start to get worried about this market, that we could be headed for a much bigger correction than we're seeing right now. NASDAQ Composite, same thing, fifth wave top. Once we see wave 5, we start a wave count to the downside. This could be an A, B, C, or it could be a bigger wave 1, 2, 3, 4, and 5. We'll have to wait and see how that plays out. On the weeklies, this is the critical number, this dot plot. As long as the market is above these dots that you see, the market is positive. It turned down at the beginning of last year, came back up a little for a couple of weeks, then turned back down again. But since October, it has been to the upside, and the dots are below the market. That's a positive sign. Again, 13,230 is a 20-week moving average. We closed today at 13.5, so we could get another 200 points to the downside in the NASDAQ. The biggest problem is interest rates. We came up here to 4.2 a couple of times, or 4.9, and broke above it. Last month we got above it to 4.2, and now we're at 4.25. The only resistance left is this, which is 4.33. If we get above 4.33, that means interest rates are headed higher, and that could push up to about 4.5 to 4.75. That means something the bond market is telling us, that either inflation is going to stay higher, or the economy is much stronger than we thought, or the government has got to borrow a lot more money. There's some strain in interest rates. It might be just temporary that we're seeing this, and this is giving the market the excuse to pull back in August and September. As we said, we were overbought, and that's what is giving us the correction. So we have to watch the 10-year, and that'll give us the next direction. Gold continues to move lower after the fifth wave top. 1, 2, 3, 4, and now we're headed for the fifth wave. 1904 is the 200-day, but this wave right here is projecting a little bit lower from there. That's the fifth wave bottom. Usually it's below the third wave, which was 1900. So we'll have to wait and see how this plays out. August, messy, choppy. September, the worst month. So we're there. Market is bouncing around after going up a lot more. This is the expected pullback that we're seeing in the market. As I call it, is pruning and planting, where you take some off and look to put it back in and pick up the stocks that you don't have that you do want in your portfolio. Those are my views. Those are my thoughts. Again, if you would like to come and get more information, you can come to compak.com, set up an appointment wherever you are. We will review your portfolio. We'll do a plan for you. We'll show you what we're looking for, what we would see as the correct risk profile for you, and then recommend a portfolio for you. All of that is free just by going to compak.com. Thank you for joining me today. I will be back next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.